Hey, welcome back. Thanks for visiting, I guess. No, if you're watching this on anything other than YouTube, you may not get the whole video. And so what I'll usually do is put the links somewhere below in the comments or in the description. You can follow the link to YouTube, watch the whole video there. Hopefully that's helpful. So today I want to talk a little bit about the Corporate Transparency Act. If you haven't heard about it, talk to your lawyer, talk to your accountant. I guarantee you they have or they should have, because it's going to hit a lot of business owners that are out there. And what it is essentially a reporting mechanism where business owners will report what's called the beneficial ownership information of their company to the government. Now, the problem is, and the reason this law was created, is that the current lack of beneficial ownership information reporting currently has made the U.S., frankly, a choice destination for establishing shell companies, hiding ownership, kind of that name game. And actually, it has been viewed as a pretty big concern for the U.S. trying to combat money laundering, terrorism financing, human trafficking, counterfeiting, fraud, etc. So, in fact, if you go back to, I think it's Bloomberg, had an article in 2016 where they said the world's new favorite tax haven is the U.S. So all this has combined to give us the Corporate Transparency Act. And this is run through the U.S. Treasury Department's Financial Crimes Enforcement Network. So I call that FinCEN for short, which is what you should call it as well. And it's going to require reporting for individuals who directly or indirectly, as I'll talk about later, own or even control a company, in many cases without even having ownership. Now, FinCEN estimates that there's approximately 32.5 million pre-existing entities that will be required to report under this new act, and then that there's approximately 5 million new entities created in the country every year that will be required to report. So as I said, there's a really good chance this will hit you if you own any type of company. So first let's start with who's required to report. Well, the law says that every entity that reports is required to reporting, or that registers is required to report. So this is going to be your domestic reporting companies, such as your corporations, your LLCs, any type of entity that is required to file some sort of document with the Secretary of State or a similar type of government entity. Will also hit foreign reporting companies, again, corporations, LLCs, or any other entity formed under the laws of a foreign country that is registered to do business in the States. So those are going to be the two things that it hits. So LLCs, corporations, those are the easy ones. If you register a partnership with the Secretary of State, then this could hit you as well. So just be wary that it is very, very broad. Now there are 23 exceptions, right? I mean, what is a law without any exceptions? So I'll run through these. And if you hit one of these exceptions, you may not be required to file a report. So general partnerships, again, which are not registered with the Secretary of State, not required to report. Trusts that do not involve what I call a creation filing. So again, when you file or create an LLC, you file your articles of organization with the Secretary of State. That's a creation filing. So if you have created a trust that does not require a filing, you may be exempt. Any foreign entity that does not register to do business in the U.S. Publicly traded companies that are already SEC registered, government authorities, banks, brokers, dealers in securities, securities exchange or clearing agencies, investment companies, investment advisors. Again, these are exempt from having to report. Venture capital fund advisors, insurance companies, state licensed insurance producers, accounting firms registered with the Sarbanes-Oxley Act, public utilities, financial market utilities, tax exempt entities, and entities assisting tax exempt entities. Here's a big one. So large operating companies in the U.S. These are exempt, and that's defined as having more than 20 full-time employees, operating at a physical U.S. office, and filing a tax return showing more than $5 million in gross receipts or sales. That's what makes up what's called a large operating company in the U.S. and is exempt under the Corporate Transparency Act. And then inactive entities. So if you got a company that you set up years ago, stopped doing business, no longer doing business, not going to be required to report. So that's who's required. If you have questions, contact your friendly neighborhood lawyer or accountant, business advisor, but figure out if you're required to report or if you're exempt. Chances are you may be required. So what must be reported? There's three things. So you've got the information for the actual reporting company, you have the information for the beneficial owners, and then finally you have the information for the applicants. So first, for the reporting company, full name of the company, the full legal name of the company, any trade names or doing business as names, the business street address, so no P.O. boxes, the state of formation, or registration if it's a foreign company. So where is the state? In here, it'd be Ohio. And then finally the federal tax ID number. So the EIN or whatever the ID number is for the company. That's what needs to be reported for the company. For beneficial owners, first let's figure out what exactly is a beneficial owner. As I alluded to earlier, it's someone who owns the company, or maybe controls the company, so directly or indirectly controls the company. So what the law asks is it's looking for everyone who has substantial control over the company. Substantial control could be your C-suites, your senior officers, your presidents, your general counsel, your owners, obviously. Really any type of decision maker that makes major decisions over the company. Does not require ownership. The title really is not relevant. So if your title is non-decision maker, but you exercise substantial control over the company, you make all the decisions, that's what's going to qualify you as having substantial control. Again, can be direct or indirect. So it could be, think of like a parent who is not an owner, isn't employed by the company, has no real role with the company, but essentially makes decisions for the company that the children who own the company follow. That would count, or could count, as a beneficial owner. The other was an actual owner. So if you own 25% or more of the company, you are a beneficial ownership. So what do you have to report? And this is where some people are getting frustrated from what I hear. If you're a beneficial owner, you have to report your full legal name, your current residential address, again, no P.O. boxes, no private mailboxes, anything like that, your date of birth, a unique identifying number. So this could be from your passport, your driver's license, or you can get an actual FinCEN identifier through the website. You need to send in or submit a picture of identification, and then you fill out this form, and I'll go through the timelines of when that needs to be done. If you're an applicant, so an applicant is anyone who actually files the paperwork for the company. So I set up companies for many of my clients by filing their articles of organization with the Secretary of State. So I would be the applicant in that scenario. And then similar to the beneficial owner, the applicant is going to need to report their full name, their current address. In my scenario, as an attorney working for a company, I'm able to report my business address because I do that under our firm. If I was just Joe Smith out there doing this for people, I'd have to report my residential address, date of birth, unique ID number as well. And then if I'm not using a FinCEN ID, then I have to send in a picture of the identification. So applicants, as far as the reporting requirement, does not apply to any company formed prior to January 1, 2024. So If you're prior to January 1, 2024, you still need to report the company information, you still need to report the beneficial ownership information, but you do not need to report the applicant information. However, going forward, January 1, 2024 and forward, you have to report the applicant information too. How do you report? If you Google, which is the greatest verb in the world, FinCEN, or Corporate Transparency Act FinCEN, it'll take you to the FinCEN website where you can file this information through their online portal. There are some significant penalties for this, both for failing to put the right information in a report, as well as improperly disclosing the information in some scenarios. So let's start with if you willfully, so if you on purpose use false information or put in the wrong information or don't file, there are civil penalties up to $500 per day for every day that the violation continues. And then there are criminal penalties of up to $10,000 and or 2 years in prison. So pretty substantial. If you realize or recognize that you submitted some incorrect information in your report, but you voluntarily correct it within 90 days, there is the possibility of a safe harbor, but very, very, very important that you get this information right. Okay, and then finally, what everyone keeps asking is, when do you have to report? What's the timeline? Well, if you are a company that was created, or an entity, partnership, registered partnership or LLC corporation that was created before January 1, 2024, then you have until January 1, 2025 to report. So you've got a year, a little less than a year, because today is, I think January 5th is today. So I don't know when this will go posted, but when I took this video, it's January 5th. So you've got until the end of the year to get your report filed if your entity was created before January 1, 2024. I know it's a lot of dates, but make sure you got that right. Created before 2024, you got until the end of 2024 to report. If your company or entity is created from January 1, 2024 until January 1, 2025, then you have 90 days. So 90 days after your entity is created, which will be the date you're shown on your approved articles of organization for an LLC, for example. You may file those on January 10th. They come back to you on January 12th, but they'll show on your articles that January 10th is your approval date. You got 90 days after that if you're within that window. And then finally, for companies created January 1, 2025 and after, 30 days, okay? So my recommendation on things like this is you file your articles of organization or articles of incorporation, whatever they're going to be. You get your approval back from, in our case, the Secretary of State, and then you immediately go and you file your FinCEN report. So that'd be the way that I would treat it. If there are updates, so if company ownership changes, and remember it's beneficial ownership, so if decision makers change, companies bought or sold or inherited, whatever the case may be, if there's any changes, you have 30 calendar days to report that change after the date that the information you last reported to FinCEN changed. Now that's a little complex, but it's really important that you do your timeline. So for a company that was formed prior to January 1, 2024, if that company is bought or sold in June of 2024, and no information has been reported yet, then that 30-day clock has not started. But if that same company filed their FinCEN report in January or February of 2024, disclosing all their beneficial owners, and then the company was sold in June, and now you have new beneficial owners, you got 30 days to update that report with FinCEN. And then obviously it's a lot cleaner once you get into a scenario where you're registered, the company is going to be registered. So if we're in 2025 or 2026, something like that, company gets approved or set up, then the company's registration is filed with FinCEN, then the company is sold. You've got 30 days to then update the information with FinCEN. So that's the Corporate Transparency Act in a very short, simplified video, at least to give you an idea of what you should be talking to your attorney about, or your accountant, your business consulting, your team. Make sure that somebody is responsible for putting this report together, that it's calendared, that you know when it needs to be filed. And then, for folks out there that have a litany of companies, maybe you've got lots of subsidiaries or sister companies, you own 12 LLCs, I really recommend putting together kind of a self-audit, if you will, of what companies you own, if you have any joint ventures or partnerships with people who might be beneficial owners in those companies. Create yourself a little spreadsheet, make sure that you have all that organized so that when it comes time to report this, it's a little bit of a simpler exercise for you. So hopefully that was helpful. If you have questions, comments, go ahead and feel free to post those below. And most importantly, if you found this at all entertaining or at least informational, click like and subscribe. I appreciate it. Thanks. Have a great day. Bye.